Hello traders and welcome back to the last trading recap for 2024. We're trading the micro NASDAQ futures contracts on a 1,000 tick chart. The date is Tuesday, December 31st. Let's take a look at my results for the day. I took 7 trades. I had 6 winners. I risk approximately 20 points on a trade. Some trades are a little bit more. You can see my one losing trade here today. I lost 25 points, but in trading close is close enough. I try and put my stop where the price action tells me to do so, and it's not always within 10 points. So I risk about 140 contracts total, 140 points total on my 7 trades. I make 107 points, which is an average R per trade of about 0.76. My win rate is 86%, which is fantastic. And I pay a very modest 9% in commissions. So overall, this is a fantastic day, 10 out of 10. They get better, but not a lot better. Let's take a look at a chart. This vertical blue line is 9:30 Eastern time when the New York Stock Exchange and the NASDAQ Stock Exchange open. If you're day trading futures like I am, that's probably the time to start trading. And in the pre-market, price is more or less going sideways. This represents about 5 or 6 hours of price prior to the open. So at the open, price continues that trend of moving sideways. We get an opening range, and we just get these bounces back and forth. And then we get a breakout of the opening range. So this is very short. This is only about 6 or 7 minutes from 9:30 Eastern to about 9:37. And then we get a breakout and a trend. And this is a really nice microchannel trend. There are a couple reasons why you could have bought this breakout pullback, like, for instance, the wick on top of this bar provided a good limit entry. It was a break above this microchannel trend line. It was a break back into and then a failure out of the opening range. You could have entered on the next bar here when this almost doji bar closed bearish at least and below its middle for a breakout of that pattern. You could also have entered on a breakout of this 4-bar consolidation here, which was something like this, and you could have entered short here or here on a breakout there. This microchannel extends pretty much a measured move, which is very interesting. Measured moves are always very interesting. So there is the first half of it, and once it breaks out, it pretty much goes exactly a measured move. My platform gave me a warning window when I tried to execute a sell, an entry, and I got a bad fill as a result. So I think I've solved the problem. I don't need my platform asking me if I'm sure I want to take a trade. As a day trader, immediate executions are extremely important. So we're just going to chalk that up to experience and move on with life. We get a micro double top pullback almost to the 20 EMA after a very strong tight move down. We get a very strong close on this bar. I get short there. Price goes sideways for a couple bars. I've got my stop set in the correct price action location here at about 21,402. This pullback bar comes very close to my stop within about a point, but does not hit it, and then closes down near the low and is sort of a bearish reversal bar. It does close with a bull body, but I enter a second trade, or I add to my first trade on the close of that bar or the breakout below it, however you want to look at that. So I was 2 contracts short. I am now 4 contracts short. My stop is in the same place, 21,402. Price is not in a big hurry. I take some size off as price comes down right towards the low of the day. That's probably a little bit early, a little bit anxious on that one. And then price breaks out below the low of the day and below this flag consolidation, and I take more profit there after 2 strong bars and a pause bar. And this is basically a failed breakout through low of the day, and price comes straight back up. There are not enough strong sellers to keep this price going. And so my last 2 contracts I get are at break even here with my second entry. That's totally reasonable. This is a reasonably managed trade, okay? You've got a couple contracts short. I've managed my risk. I get a second opportunity. I put on some more risk, and then I'm taking profits as they're available to me, and I'm managing my risk when the price comes back and moves against me. This is indeed a failed breakup. Price comes right back into the middle of this range. The middle of ranges generally act as magnets. and I get short here again on another micro double top and a breakout or a failed reversal, failed breakout, if you want to look at it that way, pierce and fail, a couple different things you could call that trade. And price is not moving in my favor, and I don't like what it's doing, which is it gives me a little push down, but then strongly reverses, and I just cut that trade for, let's just call it break even. I made a couple points on it, but it wasn't a very big deal. And that ended up being the right call. Cutting trades early, for me, is not generally the right way to manage my trades, but in this case, it worked out. And price comes straight back up into the opening range. We get a little consolidation, flag, pullback, and I get long for a push into the middle of this range. Again, that should act as a magnet. I take one contract off on another, on a little push here to the upside, and I set my stop to break even, and I get stopped out there on my second contract. Price goes sideways, so we've got another consolidation here, and this is a reversal turning point, so it's a little bit difficult to judge exactly where the turning point came or what your justification is for taking a reversal trade in here. Remember, there is no such thing as a high probability reversal trade, so if you want a win rate that's above, let's say, 60%, 65%, you probably need to not take reversals or take the very, very best reversals, which are few and far between. Price is selling off back into the middle of this lower range. So there's magnet price, a magnet for price right here, around here. Price is going sideways, just bouncing, bouncing, bouncing. We get another consolidation here between the two ranges, and we get a rally up into the middle of this range and a breakout of this high. And this is a very strong move. 5 consecutive bull bars, wicks on the bottom, closes near the highs. This is extremely strong. So yes, we are in a range. This is kind of a trend leg, if you want to look at it that way, and then an acceleration. And I take a long position here on a pullback, and I'm exactly wrong. I get stopped on that trade. So that's my one losing trade today. This ends up being a breakout, a failed breakout, and a 2-bar reversal. And at this point, we're thinking it's probably now there's going to be other trap traders. I got trapped on this trade, right? So people who are entering above the high of this bar on this blue line, people who are entering into this strong move, people who are entering above this high here, this breakout. There are reasons for there to be lots of buyers in here. And you can see from the strength of these bars that there are lots of buyers there. And what happens when lots of buyers get trapped? Well, you usually get a stop hunt or a pretty strong, sharp reversal. And so I just get short again, and I have a fairly tight stop, my usual stop, which is kind of here above this prior bar, signal bar. And I take profits, first profits into the low of this consolidation. You can see I've marked it here with these 2 lines, which is a logical place for sellers, for buyers, trapped bulls to have their stops. And I take my second contract off as we get a breakthrough. It's just a momentum move, and it's exhaustion. And I get pretty much a perfect bottom there. That is a beautiful exit and a huge profitable trade from 34 to 20. So I make about 14 contracts on my first and about 24 contracts on my second, 24 points on my second contract. We're kind of getting these pushes, pullbacks, and price comes down, sells off to the bottom of the day again and the bottom of this lower range. Breaks through the low of the day on a couple of big, strong bars. We get a nice pullback. And this is a 2-legged pullback, and I think that this is an A+ setup. So let's look at this together. This low to this pullback here is leg 1 of a pullback. That is leg 1. As soon as a bar makes a low below the prior bar, that is what's called a low 1, and it is a reason to enter a short trade. It signifies the end of the first leg of the pullback. So if you were aggressive and if you were scalping, you could potentially have shorted here at about 358. And I would suggest, even having not seen the future, I would probably suggest taking profits into these lows, prior lows, which is about 348. Nice little scalp. What goes on to happen is we have a little second leg here. You could call this a second leg on this one singular bar, and then a new low, so that's a low 2, and then a third leg up. And this third leg breaks above the high of the first leg high. And when that happens in a strong downtrend, this is one of the locations in price action where you can count on there being more sellers, more trend continuation participants than there are reversal participants. So above this high, you can expect sellers, which is exactly what happened. We actually get a fairly large pullback. So the high of this prior bar is about 68. The high of this is about 78. So this comes up 10 points past the prior pullback high. And then this is an excellent signal bar. A signal bar is a bar that tells you to enter a trade. The bar you enter on is an entry bar, which happens after the signal bar. So a great one bar reversal signal bar. What are the factors? Number one, it's in a 1, 2, 3 leg pullback. You could also look at it as a 2-leg pullback or as a 1-leg pullback. There are different ways to read that price action. The second reason is it's an excellent one bar reversal. It has a wick on the upper half. It closes down right near its bottom. It reverses most of the price of the bar before it. It's above the EMA. And the next entry bar is an excellent, you can see me short here, is an excellent entry bar. A very, very strong bearish bar to the downside, closes perfectly on its low. And I have another order execution, this is my second order execution problem today, where I take this first contract off and I accidentally must have canceled the rest of my order. So then I didn't have a stop and I didn't have a target. And it made me really uncomfortable. I didn't want this trade coming against me and turning into a loser. I didn't want to necessarily manually set another stop order. There's problems with that. You can get the quantity wrong, which will screw up your order. You can get the location wrong, which will screw up your order. You can get the direction wrong, which will add to your order rather than stop you out of it. There are definitely perils with setting another stop manually in the heat of the moment. So I just managed this trade with my finger on the flat button or the close my trade button. And I did initially have an order waiting here at the lows at about 48, but as it worked out, I just took it off, took profit on it. My day was looking good. I wasn't comfortable with not having a stop. This is a good result. It's a good trade, an excellent entry, a great setup. I didn't let it go as far as it could have done, which it did on the next bar. But in trading, close is close enough, and green is green. And you have to take it. So this is fantastic. A+ setup. Take those every single time you see them, and you will make money. And swing your trades to at least the low of the prior push low, which would have been here around 46. And depending on the context and the strength of this move down, you can wait and swing profits and look for further profit here below that low. Price pulls back. This is looking like my last trade of the day. Price pulls back strongly all the way up to the bottom of this upper range, and then we get these really crazy strong downside bars that happen in like 5 seconds. There's just a spike, and I do some experimentation with some trades here. So let's just ignore those. And then it looks like price is doing outside of this blue box here, then price is doing a single, double, triple test. And I think that there's going to be, and then there's some upside strength here, and price comes back down to this low again. I think there's just going to be a little bounce. So I take a scalp trade here, long there, very, very tight stop, and an excellent exit. So the risk to reward ratio on this trade is actually fantastic, which means you could have traded it on bigger size. Instead of taking 2 contracts, you could easily have taken 4 contracts because the risk, the stop was only like 5 points away. I only took 2 contracts on that trade, but nonetheless, it was a great trade and a great way to end the day. I hope you came a long way with your trading in 2024, and I hope that your trading in 2025 is better, much better. Trade in sim and get to be an excellent trader in sim. And then the only thing you have to do is replicate those results with capital. Don't go risking your money, your hard-earned money, until you know for certain that you're a profitable trader in sim.